Hello and welcome to our VectorVest strategy presentation titled How to Develop a Winning Trading Plan. My name is Brian D'Amico, Manager of Educational Services here at VectorVest, and it's my pleasure to present the strategy for you. When investors are asked what their biggest problem is, most respond by saying they don't have a plan. Why is it important to have a trading plan? Well, if you don't have a plan, many times you'll find that you're making trades based on emotion. And those emotional trades are usually the ones where you see the biggest losses. In fact, emotional trading can kill your portfolio. If you have feelings such as hope, fear, greed, anger, frustration anytime before, during, or after your trades, you most likely don't have a plan, or you don't have a plan you can trust. So ask yourself, do you have a plan? And if you do you follow it? Do you believe in it? Well, tonight you will learn how to make a plan. When you make your plan, you've got to write it down. By writing it down, you are much more likely to follow it. If you just keep your plan in your head, it's so easy to ignore your rules. Remember this Chinese proverb, the faintest ink is better than the best memory. Your plan should have 3 components. It should detail when you will buy, what to buy, in other words, how will you select the shares to trade? And the third component is when you will sell. This includes when you will sell individual positions and when you will exit the market entirely. So let's break down each one of these. And as we go through this, if you answer the questions we're about to look at, you will have a trading plan. So the first part of your plan should be when to buy. The main question you should ask yourself is, what will trigger you to enter the market? For example, you may decide that when a VectorVest confirmed up call is signaled, you'll enter the market. So let's get into VectorVest and take a look at the market timing signals available to you. You would want to choose a signal that matches your investment style. To understand that better, let's take a look at the market timing graph. Here you can see the market over the last 14 months. And as I mentioned, you want to select a market timing signal that matches the type of investor you are. Some signals will get you in very early to market trends, but may have a high frequency of their signals, while other signals may occur less frequently, but you don't get quite in right near the bottom. For example, let's take a look at the quickest indicator that we have, and that's called the primary wave. So I'm going to add the primary wave to the graph here. As you can see here, this signal will give you a very early indication that the market has changed direction. So you can see here how close you get in near the bottom. Same thing over here, you're getting in very near the bottom here. Same thing here, and you're also getting out early near the tops. However, you'll also notice that there are times when the signal changes multiple times over a short period of time. Here you can see multiple signals in a short period of time. So let's take a look at another signal. So if I switch down here to a signal called the green light buyer, one of the characteristics of this signal is that it actually gives you multiple entry points within any given upturn. So with any upturn, you have multiple times where it's giving you a signal that it is okay to enter that upturn. However, notice that green lights still appear near market tops. As you can see here, there's some green lights here when the market is toppy, as well as over here. That being the case, you may choose our other signal over here called the RT Kicker Combo. So I'll switch to that. This signal also has the added benefit of giving you multiple entry points, not just during up markets, but this gives you multiple entry points during down markets as well. So when the market's bullish, you have multiple times to enter, and when the market is bearish, those of you who like to play the downside of the market, it gives you multiple times to enter a down market as well. Our other 2 signals that we have are a little bit more longer term looking. First off, we'll come down here, we've got the DEW, so I'll add that to the graph. The first thing you probably notice is that the DEW signals do not change very often. Now you don't get in as early to a market bottom as you did with the primary wave, but you also don't have as many back and forth signals when the market may be moving sideways or near a turn. All right, so that was the DEW signal. Now I'm going to switch down here to our confirmed call. Now this confirmed call is our most conservative market signal. Just like the DEW, you may not get in right at the market bottom, but you also benefit from less frequent signals. So you can see here, there's one signal which lasts that entire upturn, one signal which lasts this entire downturn, and so on. So as you can see, there are several timing signals from which you can choose. You can even use them in combination with each other. For example, you may say that you will only buy on a green light when the market is in one of these confirmed up calls. The main thing is you should choose a timing signal that matches your investment style. Whatever you decide, you should write it down. All right, so write down what will trigger you to enter the market. The second part of your plan should be what to buy. And this is where you answer questions such as, what criteria will I use to enter a trade? How many shares will I buy at once? Will you buy one position each day, or just fill your portfolio on the first signal? You'll also ask yourself, how much will you invest in each share? To help answer these questions, each week we provide a Strategy of the Week video which describe share selection techniques. We highlight searches in our Unisearch, we show cherry-picking methods, and we show how to use industry groups and sectors. Once again, you want to choose a technique which finds shares that match your investment style. So you can see here I've listed a few examples. What criteria will I use to enter a trade? Perhaps you might just choose the top stock from the stock viewer. Or maybe you're a technical trader and you like to use MACD crossovers. When you get your signal to enter, maybe you'll buy 2 shares per day. Maybe you'll buy 5 at once. Maybe you'll buy 10 at once. And then you've got to decide how much money you're going to put into each position. Once again, you should write each one of these down. And as I said, each week we have a Strategy of the Week video to help describe these share selection techniques. In addition to watching these strategies moving forward in time, we also have our historical videos available to you in 2 places. First one is back in VectorVest 7, so let's take a look. Here in VectorVest 7, you can access those videos if you come up to the Training tab at the top, and then if you scroll down, you see there's a link here for the VectorVest University. When you click on that link, it'll bring you to the university, and here you can see a tab for the Strategy of the Week. When you click on that, just click on the AU. When you click on AU, it gives you all of the strategies throughout history. So in order to play one of them, just click on Play Now. The other way is through YouTube. So I'm just going to go to youtube.com. And once you go to YouTube, you could just do a search for VectorVest, SOTW for Strategy of the Week. And if you want the Australian Strategy of the Week, just type in AU. And when you hit Enter, you can see the VectorVest Strategy of the Weeks are here. And we've been uploading them here since about April of 2013. And you can see there's many stock selection methods available to you through these Strategy of the Week videos. You've got cherry picking techniques, prudent search methods. I'll scroll down. We teach you how to use CI, which is Comfort Index. We teach you how to use searches in the Unisearch. So as I said, there's many share selection techniques to help you determine that question of what you're going to buy. But always keep in mind, it could be just as simple as buying top stocks from the stock viewer. And once again, whatever you decide, write down the answers to these to build your plan so you have something to follow. Now, perhaps one of the hardest things for investors to do is sell a position. If there was a part of your plan that was the most important, this would be it. Here you want to write down what will trigger you to exit the market. And this is where you would once again use our market timing signals that we looked at earlier. The next 2 questions will help you determine when you will exit individual positions. You want to decide what will be your stop criteria and what is your profit target. You should decide ahead of time what you will do when that profit target gets hit. To help you set these stops, let's use 2 guidelines from Dr. DeLito. These are our risk management guidelines. First off, you should limit your loss to no more than 1% of your total capital. So that means if your trading account is $100,000, your maximum loss on any trade should be no more than $1,000. And the second guideline is you should never lose more than half your profit. Now that doesn't mean if you make $10 on a trade that you should close when you're only up $5. However, you should have a profit objective and close the position if you lose half of that. A good place to start would be 10%. If you're up 10%, you should make sure you walk away from that trade with at least a 5% gain. So your homework is to set aside time and actually write down your plan. Once you do, you can paper trade it for a while and refine it over time. By doing this, you'll be on your way to having a winning trading plan, which will be your key to being a successful investor using VectorVest. I'd like to thank you all for watching, and we look forward to working with you.